fire now is closing in. nothing to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So as we saw last update not that long ago at the Asian session, we talked about the close beneath this daily trend line. We're going to do a quicker update than usual just to give you an update on BTC, because we did give you an entire weekly breakdown of the stocks and total and Bitcoin dominance and everything. So we're just going to go over Bitcoin only today. So as it looks, we got rejected off this 0.65 of the pitch fan, diagonal pitch fan mean reversion path to the upside, and came down beneath the 618 and closed some candles beneath this, setting a new sentiment beneath the 618, which was previously an ascending channel that followed this pitch fan, which is now changing sideways in a manner and trading beneath the equilibrium of this channel. So until we can break above the equilibrium of this channel, we are slated to do a correction wave to the downside and recover this wick, in my humble opinion. Let's go prove myself wrong as we go into high block capital. And what is high block capital? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker, and we get to see where those stop losses and crispy characters lie in wait. So let's go do that now. So as it stands right now, Bitcoin has come to the daily open of the Asian session and stopped out a bunch of shorts rather, and induced a lot of longs. Let's go see who they stopped out. So they liquidated these 27 million and 29 million in 100x, as well as this. Oh, come on, it always does this for some reason. Tries to update, I think that's what it is. So you got this 27 and 29 million in 100x over here, this 48 million in 100x over here as they open up into red candles, not a good look, and this 33 and 40 million in 100x over here, and they're attempting to come up into these 25 million characters, these little bubbles up here. Meanwhile, they're pinging in a bunch of longs, which are also opening at the top of the range. You notice how they ping the longs and come back, and they give them chances to get out, but ever so slight. Does that mean they're making a pool of long 100xers to come back into here on the 1 minute time frame? That could be the case. There's some 100x long pools down here, and of course their partners in crime at 50x down here as well. So are they projected to come back into this for false move Monday and take out some of the longs? You do have $99 million still in 50x over here at 29,729, as opposed to their 76 million in shorts, which is less shorts to longs in this ratio. So if they come up and take out some of these pools at even 30,509, they could basically come back. It all depends on how much they ping in on this London close. Let's go to the external time frame of the external liquidity pools on the heat map here. Shout out to everyone here. So on the 7-day time frame, on the 7-day, you are attempting to come into some of these liquidity pools up here perhaps, but on the overall grand scheme of things, looks pretty even Steven on the 7-day. When you start to, it's pretty packed on both sides. Everyone's getting geared up for a move on both sides of the coin. Last time we did that, we went up to here and down to here all in one. So it could be a wild news week. And the Forex Factory, if you go to forexfactory.com, we do have some news coming out on Wednesday. Basically, you have some CPI data for the US dollar, basically slated at some forecast of 3.1%, and the previous was 4%. Are we going to see some sort of move based on that leading into Wednesday? So we could be going sideways in preparation for that, so they can attack both sides equally depending on the news and not have to deviate far away from where the liquidity is. So we could see a standstill and a buildup of liquidity on both sides in preparation for a stab up to go down or a stab down to go up, and just hold this range. If we go to the 1 month, 1 month insinuates that there is more liquidity to the downside in these double digits of billions here on the monthly time frame. If you go to the upside, we only have single digits up above here, unless you start to go up beyond the internal range up to the external range at 31.7, then you got double digits up here. So on the monthly time frame, the imbalance is to the downside, and coming to the 29k region to reclaim that wick would be ideal to spawn some divergence off this and see a proper swing to the upside off the divergence like we normally would see. And if we go to the 3-month time frame, 3-month time frame has a little bit more in the external range up above, suggesting you could come up and stab these pools at some point in the near future. I definitely would like to see it. I would like to see a proper stab down below first. For me personally, coming down to the 29.2, 29K region, spawn some divergence off that at least. If you look at the entire range, entire pools within this range, you do have more down at 24K. Does that insinuate a 𝗥𝗲𝗹𝘁𝗲𝗱 to grab it, or are these protected positions of the whales and market makers? I don't know. Let's go to the 6 month. The 6 month also has 130 billion rather, and 156 billion down at 24.6 and 24.3 accordingly, and the entire range down here is caked up quite nicely to insinuate a reversal after some liquidity is possibly taken up here. The path paved to the upside goes up to 33.6 and starts to taper by 30 billion, and so 33.6 on the 6 month does have a liquidity path paved to a stab of the shorts up in that region, but the overall imbalance is to the downside. If we go to the 2-year time frame, however, this is where you see the most liquidity pinged in and start to see the idea of coming up to that 450 plus, which is now approaching 480, I would say $480 billion up to 33.2. So do we see this come down to the 29.2, 28.8, get that 40 billion, that 120 billion down here, spawn some diversions off that to come here? That's what I particularly think might happen. Everyone thinks 30K is good support. They fake everyone out and use their liquidity to spawn that divergence and mask their positions to the upside. That's what I would do if I was a market maker. I would be patient and wait rather than FOMO on False Move Monday, but that's just me. Alright, so looking at the 212 billion down at 24.4 as well, highest liquidity in the range here. If they go up to this and spawn some bearish divergence, they could sharply come back down to this like a plummeting spy balloon and come down into this range as well. If you look at this on the 2-year time frame, we got a bunch of 100 billion all the way up to 34.8 and beyond. Everyone's saying there's not much in this range to recover. I mean, yeah, you could use standard TA and points of control and all that stuff, but if there isn't liquidity to justify the move, then the move just won't happen. So you need some money to take off the table in order to go up, and conversely to go down. You can't just go down for no reason. So going up into this liquidity pool, as we said, there is suggestions of tapering at that 33.2 region. Conservatively speaking, going up to 34 would be maximum, because at 34.4 it starts to taper by half. You have 55 billion at 34.4 and 111 billion at 34 even, 120 billion at 33.6 and 160 billion at 33.2. So the most is in these three ranges up here. So going to 33.2 if we go that high at all. Yeah, that's basically unchanged since whatever, but basically looking at the monthly time frame for this little bit of retrace into some of this liquidity would be ideal. The idea of like bullishness is being portrayed quite diligently by the projection of price maintaining this zone. So is that real or a fabricated image to appeal to the longs to enter is the question. So if we go to the possibilities for both sides of the equation, we've been seeing this rejection at the 786/706 of the bullish trend-based fib level. Where did we get that from? Well, we basically got it from the first impulse retrace out of here, and the 236 level at 30,069 is your idea to come out of this region, which we have not been able to break that resistance on the 786 for the entirety of this range trade. So this math is basically containing your support and resistance. If you break out of the 786, you would come up to these fair value gaps and liquidity pools that we outlined in the past back here on July 7th. So these pools and this take profit region would be in inbound. And we talked about earlier today that the 6-hour time frame holding above that level, which it did, would be your cue to possibly enter a long. Had you done that, you would be up by a good percent with some leverage. Hopefully somebody out there was keen on the idea. If you look at if it was closing beneath that 30,019 level, then conversely you would have possibly seen this move to the downside. So we have both areas projected out for you, and this is still valid as long as you cannot maintain this 236 and the other 236. So these levels are also valid. How did we get that bearish trend based fib? Well, we took the impulse here and then the retrace here, and then that math contains your 236 entry and also the math to go lower if we are so inclined. All right, conservatively speaking, the wick over here at 29.5 is what I'm interested in at the bare minimum, and seeing what we can grab down in this region would be nice too. All right, so let's throw on our oscillators and see what's up. Boom, boom, and boom. And the link is in the description for what we are using, momentummaster.info. Scroll down to features, toggle switches here. You can see all of it in its glory, or look at each component like the trend cloud or the baselines. We go over those a lot, so let's just leave those up. So as it stands on the 6-hour, we've been seeing this crossover of the baseline event, and we were talking about, can we reclaim this fat boy baseline? And as it stands right now, we are reclaiming the thin boy, suggesting that we could come up into this region and break through the resistance. We had previously done that here and then started to break down, and we were saying if this 6-hour and 12-hour coinciding, which with New York Open would be our guide, and that was surely the guide when it started to come back above this 30,069 level, and you could have taken that idea smoothly on the close of that on the 12-hour. The 12-hour time frame is now also starting to reclaim some of the baseline, suggesting you could come up into this region on that previous suppression of the baseline cross down event, which was had since June 26th, and we weren't able to break resistance since that time. If we also go up to the 22 in the daily, we'll skip the 22 for now, but the daily time frame also had the cross down event back here in July 1st, and we haven't been able to close a candle above those suppressive baselines. So are we getting that suppression to continue from these higher time frames with that subtle overtone of downside? Is it going to come up to go down some more? Is this B wave going to complete up here in this pocket before coming down to here? Or are we going to go down to go up? So you go up to go down, and you go down to go up. So if we're doing a weaker play down, then we are attempting to go higher. The fact that we are holding gives me the sneaking suspicion that the news on Wednesday is going to be bearish, which causes them to squeeze the bears a little bit and then drop like a rock. But what do I know? I know nothing. Gotta tell yourself that. So as we have the cross down event in play with the daily time frame, with the possible suppression of takeoff on the stochastic RSI, with the leading MACD crossing down as well, money flow coming up above the RSI suggesting a struggle. Previously, when it was beneath the RSI, gives you the insinuation of upside. Now coming above the RSI starts to suggest fatigue on the daily time frame, even though the stochastic is oversold. This is why we put these together in a suite, because this suite makes a sweet entry idea. Pardon the pun. So if we go to the weekly time frame, so the weekly time frame we were talking about, let's go to a fresh chart without the levels, because we're just looking at momentum now. All right, so on the weekly time frame, you do have this thick cloud starting to taper on the weekly ever so slightly. You were starting to close out candles above the adaptive and the weighted, If you start to fade out of this weighted moving average and even come down to the adaptive here, that would take you to 29.2. So even though it looks like it's not that far, coming down to reclaim that wick down here and holding this adaptive moving average would still be bullish in the long term. So if we came down to here and then bounced out to those external pools that we talked about with the 400 billion coming down and stopping out all of these 3 weeks of long consolidation would be the ideal thing to see. As it stands currently, we're holding the thin boy baseline, trying to negate this cross down that we had for you back on May 1st, and it's been a steady journey out with that big vector candle out. Okay, so if we go to the back to the daily and make our descent through here, we can start building a narrative, having a story structure of if-thens and everything. We already put that out there with the levels and the fibs, so we're going to start looking at that with the momentum. So the reclamation of the wicks, the cross down of the daily is one bearish overtone, coming back to retrace the super trend level at 28.3, coming down and reclaiming these wicks. And the vector candles on the daily would be ideal for a proper swing. If we go to the 12-hour, actually let's just take a look at how the 22 is poised to do its thing. 22 has previously given the cross down event back on June 26th, Monday, and it's been holding ever since. We've been seeing the suppression of takeoff due to the Williams reset here. Money flow is getting nicely beneath the RSI. I don't know how this plays out on the 22 just yet. Haven't really back tested it thoroughly. It does look like when you get above the RSI, it does fatigue out. So it looks like it could play out when you get those bullish divergence on both. Then it triggered a stop loss hunt and then they were out. So if this starts to come back up at some point on the 22-hour time frame, attempting to reclaim the baselines and cross them up though, so similar to the 12 and the 22, you are getting a thinning of the cloud. Could this be a bearish retest before coming lower? Money flow is definitely deviating from the RSI, suggesting that money does flow back in on the 22-hour. Interesting to note. 12-hour, the money flow flowed out while slightly near the RSI, not necessarily bullish or bearish, ambiguous. The suppression of takeoff idea that we talk about is due to this alarm here. So the alarm on the Williams giving back that stochastic reset of the probabilities on price action is what you wait for before you see this in tandem with the double bottom idea. This is your ideal double bottom play. As you see here, you had 1 and 2, this fertile crescent idea with the rising sun, and then that poises you for a large takeoff like this. Boom, like a 9% move or something like that. So seeing these again over here, you got that double bottom rising sun, boom. So ideally on the 12-hour, you'd like to see the Williams come down some more for an ideal long, which is why I'm not really sold on the idea. I'm not FOMOing into a long necessarily. I did put out the idea of a 1% scalp, but I'm not really looking to nurse the trade. Plus I wanted to do NASDAQ. So yeah, is it going, the cloud is also mighty thin on the 12-hour, suggesting a reversal. We are putting out the angle to that on the Binance chart here for some time. All right, so the suppression, possible suppression of the 12-hour by the Williams, and the money flow breaking beneath 50 would do that to you as well. In an ambiguous point, oversold on the stochastic, and the Williams is getting to that oversold region, but not in the proper shape I would like to see, if you catch my drift. We already talked about those fertile crescent double bottom ideas, so getting 2 hits on the oversold status with some bullish divergence is your ideal play. So getting some bullish divergence on that time frame as well. So we don't really have bullish divergence just yet. and we're not at that oversold region. And the 6 hour is ironically getting overbought. So the 6 hour expressing some fatigue here while going sideways. Is the 6 hour alluding to something? When you go sideways and then this is getting overbought without really going up, is that a bearish overtone I'm sniffing out on the 6 hour here? Could be the case. You got the money flow above the RSI suggesting fatigue as well, so this could come down for that 6 hour dump. The cloud idea on the 6 hour also giving that overtone of bearishness, showing the volume leaving as the cloud is turning in that manner, and we're getting wicked off of the outskirts of the cloud. Okay, going down to the 4 hour. 4 hour time frame reset in a manner here, attempting to push up. You do have a vector candle on the 4 hour, but this vector is blue, which insinuates a stop hunt rise idea. So this entire 4 hours could be a stopping volume candle for going lower with a rejection off this bearish cloud, unless we see some conviction above this cloud to even wick above that ATR level at 30,667 and then hold it, and then after that holding and thinning of the cloud, you'd have to see this cloud kind of thin in a manner. We've outlined this idea over and over again, and surely like this, they come out, they break the cloud, they retest, this got bought back up, and then you were gone from there. So you'd have to break above the cloud, reclaim it, start to see it thin in a manner, ideally. If you have a lot of selling volume like this wick, then it's not going to thin so easily, but in this case it might if it does that. And then you see this kind of reclamation of the cloud on the 4 hour. Until you see the reclamation of the cloud, this blue candle is just a stopping volume and possible rejection on the 50 to come lower. We haven't seen a hard reset in a while here. There's been a lot of like preemptive stabs to shorts, stab to shorts, stab to shorts without giving fresh resets. I'd like to see a fresh reset for a swing long that is ideal. The ideal setup has not presented itself to me just yet. But with that in mind, if this does continue and you caught that 30,060 entry, 69 entry off that 236 candle close, you could be still in this idea. So what you'd need to see is that cloud piercing and reclamation, retrace, and continuation. So that rise, retrace, continuation idea. This is your ABC wave out of here. And just the same, you have the projections of that happening on the other side of the trade. You have an ABC wave potential if this fades. If this 4 hour candle, which is closing in 26 seconds, if it fades off the cloud here because it being thick, then you could have just another ABC to the downside. So you could get these impulses within impulses that fade off of each other. So it's all just impulse, retrace, continuation ideas. So we got 6 seconds for this candle to close, and we'll see how this stochastic updates. Watching how much it gives you off that candle is quite interesting. So it jumped from 50 all the way up to 90, so it became overbought without really going anywhere. So that shows you the sense of fatigue in how much it resets and gets overbought again. Could you pierce up in the next 4 hours above the cloud? You could. We're running into the hours of the New York dead zone time. Let's look at how the NQ is faring. It's entering lunchtime now. We're on lunch hour, so it looks like they're dumping it. The idea of going lower, I left it to my Discord group that we would possibly be going lower into this liquidity. I was done trading for the night, and it looks like we're heading down into that region as we speak. So with this dump, is the DXY also doing the same? It looks like everything is kind of taking a bleed here. Is Bitcoin also taking a bleed? It looks like it's trying to pierce up above that level. And let's start to take a look at what is happening on the lower time frame, the 15 minute. Previously, if you saw that candle close on the 6 hour, you would have had this idea. This is exactly what you like to see with the cloud. It's all fractal in nature. So this fractal like nature of the cloud, you break through and you retrace the cloud, and then you start to go up. There's been a lot of chop here, a lot of resistance, a lot of offloading, distributing of positions, I don't know, but a lot of meandering around nonetheless. But either way, if you had taken this cloud retrace, you could even take this idea here of holding the ATR into the London session pre-open, and this would give you a smooth almost 1% thus far. So the cloud is a quite fancy tool when you see the repricing and the vector candle break above it with that thinning and the angle here and the comeback and the kiss and the holding of this super trend. I like to see it. And this reset of the 15-minute stochastic, that was an ideal entry position. But this is false move Monday, so I'm not buying it. I am not buying it at all. I think the retrace to 29.2 is the play of plays, and I will be patient in that. So we are getting to the 706 region rejection point of the trapdoor opening to the downside. This one thing to note on this Binance chart, which is we've been talking about the key. We talked about on Sunday that we were at the key point in the range, the 706, and it's also, why is it key? Well, it's also the super trend back tested level here. This purple line, this super trend is in a bearish tone, and we've been holding it thus far. So until we can break this bearish super trend, we are not necessarily flipping the script just yet. So these are all just stop hunts. If this wick even comes up here and comes down to this level, then you're still slated to come back down to the bottom of the range. All right, so as it stands right now, you had two green vector candles on the hourly. The hourly is getting overbought. 4 hour now getting overbought. 15 minute, 5 minute getting overbought. Are we going to see that push above the cloud? You'd really need to see that push up into these regions and that reclamation on the 4 hour that we talked about if you are going to see a sustained move. And so this push above this region, above resistance, above the 786. So even if you didn't know anything about fibs and all these resistance levels that we're wicking off of here, if you just had momentum master and you're just looking at it like this, it's very simple. You just wait for it to break above the cloud and retrace back into the cloud for that continuation idea. And then you'd look for a sign of support. If you don't have the support, then it's basically going to break down at the cloud. The cloud as it stands right now is pretty thick. It looks like it could possibly get wicked and rejected off of that if we go to the liquidity. The liquidity doesn't show anything pinged in on Monday. I think everyone's just taking it easy leading into the news on Wednesday. Haven't really seen much. There's still that 196 million over here at 30,820. So just to note that trader, that 25x trader is still open here, that they could wick up into. So in terms of a pool, I think we already marked it off. That's what this little bit of happiness here is. Should be at 820, but 820 is up here. 820 would also be a 618 rejection of the golden pocket retrace down out of the range here. So if you came up into that retrace zone of the 30,820 region, that would be a nice juicy idea for a short if we do come up into that region at some point during the news play, if we don't break down first. So it looks like we could possibly be in this range some more until the news day. I wouldn't be surprised if we, ping around and wick up and wick down and play around in this region until Wednesday, and then start to make the move into the news that day. So as it stands right now, it looks like we're fatiguing off of resistance. We have the stop volume candle, 2 blue stop volumes, not really green vectors here, so this is mainly stopping volume by the looks of this 4 hour. It's not really volume that you're seeing interest up here, so this could be something coming lower. So we already talked about where you would want to see if you want to go long. Basically, these fib levels are your key to resistance and support. Coming beneath the 30,069 level and closing candles beneath 30,019 is where you would start to see this potential at the pools below hitting. As it stands right now, we are resetting these hourly, 15 and 4 hour time frames, now getting overbought, so coming back down into the vectors and recovery of these wicks would be ideal for me personally. So long story short, I don't think we've seen a proper double bottom. I see a lot of wicks. I see a lot of wicks without reclaiming them, and that expresses bullishness, yes, but at the same time it also doesn't show fair trade. So there was fair trading here, fair trading there, fair trading here, but not so much fair trading here, which is bullish by nature, but you already had that bullish move. So now it's time to reclaim those liquidity pools that are still hoping for a bigger play, that are still open here. So those guys should have taken profit, and if they didn't, we need to go confirm. And that's what the idea of a fair value gap recovery is about, the wick recovery. So that's just me. I still think coming down into these fair value gaps and recovery and retracing into these pools is more of an ideal play for a sustainable move to the upside. And yeah, that's my story, and I'm sticking to it. Hopefully you caught something juicy off of that morning stream in the Asia. We talked about how Asia likes to fade it into London. Let's see, where is that? I think I have to go to the 15-minute. Yeah, so we always talk about how Asia pumps it. Let's just reiterate. So Asia pumps it, and then they fade it into London, and then London does something in between New York, which was the shift up here, and then you saw that kiss to the cloud, which insinuated London would continue it, although they've been playing a lot of liquidity games here. But either way, you could have taken that the Asia fade into the pump. Watching how these ranges interplay is quite the fascinating thing to do. So I suggest looking at knowing what liquidity provider is doing to the next liquidity provider, and how do they work in tandem with one another. Like, what is it their play is doing? Are they complementing, or are they passing the baton in a manner that leads to an upside play or not? And backtest these ideas. Asia pumps to fade to London. It's a little bit higher than the opening range, so they do a stop hunt and then drop it. So it's kind of like the narrator, you get used to seeing how the different sessions play off of one another. So yeah. Well, ladies and gents, that's my story, and I'm sticking to it. It looks like we're hitting our head up against resistance and holding this ATR on the hourly, so I'm not sold on the long, and you're getting these symbols, these dynamic alerts from Momentum Master here, set and forget alert system. Hopefully you use those effectively to position yourself, or to at least use with your key levels and fibs and whatnot. And that's about it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Wait, let's see. Oh, somebody wanted to do alluvium. I'll do alluvium for you, and then we'll be out. How about that? Boom, alluvium. Let's go. Alluvium. I'll do 𝗥𝗲𝗹𝗁 and we'll see how 𝗥𝗲𝗹𝗁 looks. The other day we saw that rocket ship on 𝗥𝗲𝗹𝗁 that took off. Did you guys see that? Hopefully. Oh, there's another. Speaking of rocket ships, looks like you're getting a rocket ship on a daily time frame that closed for 𝗥𝗲𝗹𝗁. So 𝗥𝗲𝗹𝗁 is getting in this kind of ABC within an ABC, if I do say so myself. You had this ABC within an ABC kind of thing, just going lower and lower and lower. So you're getting the bottom of the barrel of 𝗥𝗲𝗹𝗁 here, and the daily time frame oversold, getting that fertile crescent going. Ooh, looking quite nice on the idea of sweeping the lows. You did come back to this low area here. You still have, looks like a vector candle recovery idea. So this vector is recovered completely. It looks like they wicked into that. So they wicked into this vector, and you still have this range low that they could come back into. And you get that daily rocket ship. So what we like to see with the baseline, so the baselines express that reversal, right? That's what the baseline's about, this first sign of reversal. So the baseline coming beneath the candles is an ideal play. Similar to here, you had a candle close above the baseline here, and then we had some upside, boom. Even 12%, decent, right? So if you start to see the baseline or the candle close above the baseline and start to scoop it in a manner, and it doesn't happen immediately, like normally seeing the double bottom within that structure is ideal. Like here, you had another cross-up event with daily candles closing, and then boom, you had that upside play. So the rocket ships generally play out. We can prove that by going to 𝗥𝗲𝗃 and just showing you what happened since the last live stream. So, I mean, it looks very small, but somebody was pointing it out on the live, and we saw that 11% move off of a rocket ship that closed on the daily time frame. So you tell me, is it inbound or not? It looks like the rocket ship is arriving, even though they had a liquidity grab. Hopefully you didn't take that there, but you could be poised to get out of that at some stage. Let's go look at the daily time frame. Looks really good by my accounts, and the weekly as well. You got thumbs up on the 3-day and the daily. The 4-hour looks like it could come down here. Let's look at let's make our descent through the 12-hour time frame. 12-hour getting that nice fertile crescent of the Williams with that. This is what you would like to see on Bitcoin right now, is this like double bottom kind of fertile crescent. That's where I would like to position for a long. See, like there, boom, and then you get the rising sun over the mountaintops, and you shoot to the upside off that golden light of the sunshine. So the 12-hour is doing what we'd want to see on the daily. You see how everything's fractal in nature and it's front running what you need to see. So you get this ice cream scoop of the price action, and you get the candles closing above the baselines, and start to see the second hint at it here. And so you're starting to see that money flow, and the RSI also getting green in that oversold status. Looking good on the 12-hour. 6-hour getting overbought, similar to Bitcoin with that sideways action. That's a little bearish for my taste, like this sideways action while this is getting overbought. Looks like it could be a false takeoff for it going down even lower into that wick that we outlined for you at 37.81, and fully recovering that perhaps. And yeah, but you got that fertile crescent rising sun potential takeoff. It's a little bit weak on takeoff, getting these sell-off wicks as we go into these fair value gaps on the 6-hour. I'd be marking where these fair value gaps, like this one here on the 6-hour at 41.41, we could come back to that easily. And if you go to the 4-hour time frame, 4-hour getting overbought as well, even though we are crossing up on the baselines. You do have a thick cloud to getting a lot of sell-off wick rejection here, so it could be a false lower C wave down before we get out of there. So be careful if you are in that. hourly time frame. Hourly time frame starting to reclaim the cloud. Got a lot of sell-off wicks here. A lot of positions haven't broken that super trend. That same thing we're talking about with Bitcoin since basically Wednesday, July 5th. It's been holding. So until you can start closing out candles above that 40.80 level, then it's basically bearish. And even if you had taken these rockets at face value, it would have ideally set you up for a better entry. So the thing about rockets is the rockets on the higher time frame, the higher the time frame they close, the more elasticity rebound effect they will have. If it's an hourly time frame, it's not as strong as closing on a 4-hour time frame. So having that 4-hour candle close a rocket here was more likely to play out than those hourlies. So this one would have got you 3%, even though it did dump further. That was most likely due to Bitcoin or something, with Bitcoin dominance, I'm not sure. So coming up into these fair value gaps, recovery of this candle is what is ideally wanting to occur here with the baseline cross-up event and coming down into these wicks. So coming out of this range is what the baselines are insinuating, although the wicks are insinuating fatigue and potential reset on that as well with the blue vector candle. And you're not getting that strong takeoff, although you did have bullish divergence on the money flow. So positionally speaking, if you like it, this is where you have those double bottom ideas. You did have the rocket ship event and you are getting to that level. And then when you do have a real rocket ship takeoff, check this out. This was back in December, but that was with the whole market. But even still, that was a decent rocket ship takeoff, if I do say so myself, for 183% gains. So watch out for the rockets on your favorite coins and position accordingly, because they do play out. And if you don't have Momentum Master, then now you see why it's powerful. And on that note, I will bid you adieu. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and most importantly, time effective TA.